right, stocks finished on the light note today. Very small loss to the downside, but very, very small range, low volume. Typical Monday, right? It's a very typical Monday. We typically don't get dramatic moves in one direction or the other on Mondays. Today was no different. It was a down day, which has been, we have been getting small losses pretty regularly on Mondays. But as we all know, that's generally led to gains for the week. So it's not that big of a, it's not like it's a harbinger of negative, stormy clouds to come. There are a few technical indicators, though, that have been cropping up the last few days, today, that have been kind of showing some signs of weakness. And that aren't necessarily suggesting that a new bearish trend is developing, but it's definitely showing that the bullish trend is ending. That doesn't mean we have to drop, because we can just converge or go sideways, but the bullish momentum to the upside is definitely ending. According to these, I'm going to show you those signs some more today. We'll talk about the sector rotation that's underlying, that's driving a lot of this weakness. We're moving into some areas that you would expect that we would move into, but we're also seeing some different assets appear to be bottoming themselves, and we'll see what impact though a bounce in those will have on risk appetite in general. And then our trade idea of the day is a stock that does look like it has changed its sentiment and started a new trend. And so we'll talk about how to trade that new trend with our trade idea of the day. So let's go ahead and get started. Today is Monday, March the 11th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, before we get going too far, I invite you to subscribe to our YouTube channel with this icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out some of these other things over here on the right, including our Market Outlook live video. Come down to the bottom, click this heart. It opens up this tab. Hit that like button there. Same thing here with this thumbs up icon. Hit that. Click on that like button. Again, the more you do that, it helps get our content out to all of our followers on those platforms, while we always ask. So thank you to those who do this day in and day out. We got over 60. So again, a goal is 100. So let's try to get over 70 this go around. Will be our next goal here. Thank you to those again, and those who don't, you can do right now while you're watching with one or two really easy clicks. All right, let's start off taking a look at the S&P 500 with the market forecast indicator here. As you can see, we're down again today, but a very, very small loss, only 5 points, very small range. Not that, in fact, we were actually higher than the open, so take that for what it's worth. But it did cement this as a bearish near-term peak, and we ended up with a bearish near-term peak here on the near-term line. Again, that's not the most bullish. It's actually a pretty bearish peak, as the name implies. The near-term line did not get in the reversal zone, but it is lower than what we've seen for most of this year since this first little decline. That's a smaller near-term line. The momentum line did bounce, but it's still in bearish territory. So we haven't, and hasn't crossed back above that near-term line yet. So, we're still the short-term sentiment's bearish. The intermediate line has barely crossed the market sentiment line by 0.04 of a point. Again, not necessarily the most bullish sign there. It's just a small sign of weakness. Nothing. It just basically means we're not nearly as bullish as we are. It definitely doesn't mean necessarily we're bearish yet. The Dow Jones Industrial Average, the intermediate line, still in bullish territory by 0.14 of a point at 60.14. Again, 60 is the level, so that's how close we are to being outside of bullish territory. We did get another bull tag today when we were below at the lows, but you can see we had a long lower shadow. We finished up higher than the open. The momentum line did cross the near-term line there. The near-term line did stay below the falling market sentiment line. So again, can be bearish here. So we really need to follow through this intraday move today with a good post-CPI move tomorrow, right? That's the ideal, right? That would be by far the best case scenario here. Your NASDAQ 100, you can see again the intermediate line falling below the market sentiment line. The near-term line formed a bearish peak. It's in the reversal zone now. It's the worst near-term line out of all of them. Had a bigger decline there on Friday. the short-term sentiment, both lines are in the reversal zone. So pretty bearish short-term sentiment from that perspective. Really important too on the NASDAQ because that's our big driver, right? That's the big mover for the market sentiment right now. And then let's finally take a look at the Russell 2000, and you can see the intermediate line still in the reversal zone. Your short-term sentiment again coming off this bearish peak. Momentum line dropped to extreme lows. You had a bigger drop on the Russell today than we did on the others. So bigger short-term sentiment drop, extreme lows in the momentum line. So that's going to have a negative impact on risk appetite here. I mean, the short-term sentiment just doesn't look good, and the intermediate posture, which have been so strongly bullish, just is not strongly bullish. It's not bearish, but it's just not strongly bullish yet. Neither one of these intermediate lines have crossed into bearish territory or even below the chart's midpoint, which is what gets us to dark pink shading. You can see the only one that we have light pink shading on is the Dow Jones. We don't even have that on the S&P. The NASDAQ has light pink shading, has not had the yellow line, so it hasn't had the bull tag yet. So, you know, again, varying degrees of just very, very weak bearish signals. Basically, just ending the strong bullish signals we had. So at best, you could say, at worst, you can say we are in a convergence mode right now, where you're still pointed higher, you just don't have the positive momentum anymore up to the upside. If you take a look at some of the other market forecast chart on some of the other major asset classes, we had, you know, light pink shading and a red line, but the near-term line now is crossing above the intermediate line, so the 10-year yield appears to be making a change in direction after having been pretty bearish here, changing back up to the upside. The market sentiment still rising, the intermediate line still above it. So that might be, this might be all we get on the decline on the 10-year yield. Obviously, it would be a higher low than the last one we had over here. So, you know, and you wonder where the next high point would be then, if we're indeed trending. The Dow Jones, the dollar did get a dark pink shading and a red line. Again, its near-term line is crossed up above. Its intermediate line crossed below market sentiment, but now the near-term line is crossed above the intermediate line before it fell into the reversal zone. So you got some short-term bullishness in this as well. And then finally, your crude oil got a light pink shading and a yellow line there. So we're flirting with a bull tag, which again can either be very bullish or can be the beginning of a bearish intermediate posture. Considering the intermediate line still above market sentiment, and the short-term sentiment still here in bearish territory, but not too strongly bearish, you would bank on a bounce off of this light pink shading yellow line pattern. A bounce rather than the beginning stages of a bearish decline. Of course, that would mean that the strong move in commodities ETF here, big move on the momentum line, first time since over here that right before that expiration that we had a big move on the momentum line. Intermediate line still rising, near-term line still above it, market sentiment still very bearish. So, you know, it hasn't quite got to dark green shading and a green line yet, but, you know, again, we're close, and that would be a very good sign for commodities. And typically that would mean that yields are going to be rising and the dollar is going to be rising. That's been the three-headed monster here for the past few years as they move together. All right, now let's take a look at the weekly chart. And you can see, again, we talked about last week, but very likely we're going to get a transition candle this week, and as of right now it is. Now whether the transition candle is actually a bearish candle or not remains to be seen, right? That's what kind of confirms the transition candle as an actual transition. The size of the candle, of course, not surprisingly as well, is still converging. It hasn't crossed below zero yet, but still converging. So we're still kind of in that, you know, again, ending a bullish run mode rather than starting a bearish run mode. Kind of in this transitioning into more of a neutral mode, which we just haven't had because we've been so bullish for so long. Convergence on the three green arrow charts. Now the Russell has a red arrow, so now all the indexes have three red arrows, or excuse me, at least one red arrow, almost two on the S&P, and then again almost two on there, and then of course the third usually is the moving average, which means you know usually on those days that we get the bull tags, we also get the three red arrows. So we'll see, you know, we're approaching those levels, and again that usually is a really good bounce signal. Usually when we're not so mature in the intermediate trend, it also can be the beginning stages of a bearish move. So we'll keep our eyes on that, especially if it stays 3 red arrows for more than just say a couple of days. When you look at the 2-line version of the chart, you can see again we're still above the 17 days, so nothing. Again, we're nowhere near even like any kind of bearish move, flirting with the 17-day there. The Dow Jones was the one that was closest to being below the 17-day. It actually got back above almost the 8-day today. But you see all the all the MACDs are all below their moving averages. So that's why I say we're at best in convergence mode right now. The Russell's about to cross below its moving average, and you're still easily above the 17-day. So no threats yet of any kind of declines. Your DMI is still very positive. You haven't had any kind of switch here in direction. Looking at the RSI and the CCI, also still very positive. No change in direction on those. Still above 60 on the RSI. So nothing too threatening there. Looking at the Ichimoku cloud, remember once this breaks below, once this hits 0, then we're concerned, right? And you are getting closer to the blue line. You have to kind of break that blue line. That, again, that doesn't cause it to hit the 0, but it typically correlates with it hitting down the 0 down there. We're not quite there yet on the S&P. The diamonds is still very mature on its bullish trend, even though we're, like very converging big time down there. IWM never did get back to a mature trend. Is already back below its green line. And then the Qs, of course, still has its, is tried to get back to a mature trend too. Didn't quite get there. We got there for a few days, but at least it's back below 8. Excuse me, it's well above 5. Sorry, I was thinking 8. It's above. It's still on a mature trend, but this is not as strong as what we see on the S&P and the Dow. Again, not near 0 yet. Like we haven't broken the trend, and we'll see if we end up breaking it here sooner rather than later would be the expectation. Bollinger Bands, you can see we are still in the upper quartile, at least near the upper quartile of a very small band. Well, relatively small bandwidth. The bands are still inside the Keltner channels. We're below the Keltner channel here, but you still, you're back to some positive momentum. So we still don't have any negative momentum here whatsoever. The diamonds, if I can type the symbol in right, the diamonds are towards the middle of their really, really small bandwidth that's inside its Keltner channels as well. Again, still has positive momentum, but very, very weak. And remember, IWM had the bigger move today to the downside. Is not in the upper quartile anymore, and bands are back inside the Keltner channels as we are well below the upper Keltner channel. But again, still nowhere near any kind of negative momentum. So we're still pretty far away from any major reversals occurring. It just basically, like I said, worst case scenario right now is we're in a convergence mode. We filled in the rest of this gap. We filled in this morning's gap in the afternoon. We still got the rest of this gap to fill in. We're in the middle of last week's range, so we're nowhere, again, near getting a new high, nor are we breaking. Now, breaking below last week's low will be significant because you'll be in the lower half of the chart for the first time in months. And then, again, whether we stay below that for the first time in more months would be, another thing. So we're getting below 50, which would be breaking below that dotted line on that chart. That will be an important factor if and when that happens anytime. And again, we're not there yet. It was a lower high and a lower low, but we kind of closed at Friday's low point. So nothing too major there. We're just a day off of a new high. Your red lines, you're got a very small range there. When you look at the volume today and again, we're coming into an important CPI. Very small range, very small volume down there, below average on both of those. Remember, the volume is at a very low level, off of it a little bit, but still at a very low level, and we're still below 1%. Crossing back above 1% will be a significant change in sentiment. The fact that that sentiment would be increasing to the downside. So we're closer. We're not there. Volatility made a pretty decent jump higher. You drop back down here. Or at least, excuse me, you dropped off of the highs of the day. We were at 92 when I was looking at it earlier. We're below 90, but still at a pretty decent level on the VVIX. Obviously, that's correlating to an increase in the VIX. The VIX itself is above that 90% mark over there. It hasn't broken the 95% to get into like bearish territory, but it's above the 200-day moving average today. So, now let's see if that's a one-day thing. We did it was pretty much a 2-day thing last time, a 1 day the time before that. So we'll see if that ends up being very similar to what we saw last expiration cycle, and we get right back below it. Again, a lot's going to happen to do with what we see tomorrow with the inflation data and what's expected there. But you can see how we are poised for inflation to break out, not to break down, because you can see how we've been grinding higher here and converging. It's been poised to break out to the upside more so than it is to the downside. As I've mentioned to you before, the range of the VIX is just so extremely low here, below the 10% mark on the daily chart, below the 20% mark on the weekly chart. We're just, we generally don't get below this level we get below these levels on bullish moves, not on moves where we just don't move anywhere, and we've been below it for quite a while. So we are definitely in like tornado watch territory right now. In other words, a jump in volatility, which they come out of nowhere. We are very susceptible to it. Whether it happens tomorrow or not, I don't think that would come out of nowhere because everybody's expecting the CPI. But I don't know what's going to cause it to come out of nowhere, but we are susceptible to a significant jump in volatility in a very short amount of time. All right, now let's take a look at what's driving the price action. Again, you can see over the last 3 months, the weakness in the dollar, the weakness in commodities, the weakness in yields has really helped propel U.S. stocks especially higher. Let's just take a look just at today alone. That's obviously not been the case here lately. But we'll look at today alone. You can see commodities are up the most today. Big jump up higher, almost a full percent. IWM is down the most, as I mentioned earlier, down 0.75%. The Qs are also down about 0.5 or 1/3% there. The S&P was not down very much at all. So when you look at what's interesting about that is, so when you see that, you think, okay, then that means breadth must have been really good, and it was. When you look at breadth here, here's the Qs relative to IWM, and you can see it was up, still below the 50-day average, but it was up today. But look at the number of stocks above the 200-day moving average, jumping above 400 for the first time in multiple years since 2021 when it was on a decline. So big jump higher in the number of stocks above the 200-day moving average. We hadn't seen that yet. The number of stocks above the 50-day moving average also jumped back above 400. So big time move to the upside in both of those. So the breadth dropped a little bit. Well, it dropped, again, it hasn't been updated with both the New York Stock Exchange and the NASDAQ Composite. We'll see by the end of the night tonight. But as of right now, it's below its average, but still positive. It hasn't gone negative there. If you look at the ratio of the number of stocks above the 50 and 200, you can see we're almost back below 1. So getting back below 1 would be a really positive thing for this ratio. Of course, hitting 1 and bouncing back up would not be so positive, it'd be more negative. In fact, it's kind of surprising that we've been rising here as the market's been rising. Usually we rise, this rises as the S&P is falling. So for this to be rising this whole time and get above 1 and be above the moving average and all that while we've been rising this entire time is pretty surprising. Kind of an anomaly type area. Of course, lots of those types of moves here, and I mentioned the moves in some of the major assets like the dollar. You can see the dollar kind of holding where that Fibonacci support is below the 50-day moving average, but it's kind of holding there so far. The 10-year yield also kind of holding around the 50-day moving average, but also around that 62% retracement, with the MACD histogram starting to turn up on that too. And then finally, as mentioned, the commodity index making a big jump higher, and you can see the 8 and 17-day moving averages crossing above the 30. They're both kind of crossing above the 50 there. So pretty significant move for commodity prices in general. Now, of course, crude oil didn't jump very much. It's still kind of sitting at the 8-day moving or 17-day moving average, as well as the 200-day moving average. So not a significant move there, but still pretty good move in like I said, the yields and the dollar. The strong breadth kept us positive on the whole, though not above that 35 level yet. But at least we're still positive. You can see because of this positive level, the summation index is back up above almost a 775 again. So that kind of midpoint there between 500 and 1,000. So pretty decent move from that regard. If you take a look at the money flow, which has not been so positive here lately, had jumped back up above 60 over last couple of days here and finishing on Friday. So a pretty decent jump in money flow, but considering today's move, probably not going to maintain that. When you look at, let's take a look at how the sectors here perform. So bear with me 1 second while I bring up the sector chart here today. Bring up the comparison chart first. Of course, it's been an XLK and XLC world that we've all been living in here lately, and mostly NVIDIA and anything AI related. Not today, right? So today, materials and energy were your best performers. Again, dollar sensitive areas. Staples and utilities were also strong performers. Interest rate sensitive areas. And then down at the bottom, industrials, real estate, which has been acting like a cyclical stock. XLK, XLY, XLC all underperforming and have been continuing to underperform. Remember, gold has been so bullish from this February the 28th on. So it's been a strong move higher. You can see during that time, real estate has been pretty strong, utilities have been pretty strong, and materials and energy. Right, those have all been your strong interest rate sensitive areas, dollar sensitive areas, all pretty strong. And then XLK and XLC had their moments, but since then have now just barely up at all. And then XLY has been down. So, it's not been a risk on move for the past few weeks. It's been, even though the market's been, 0.75% higher and coming off of being 2% higher, it's still been kind of a risk-off move. If I were to take a look at the asset class comparison as well, and then go back to that same February 28th, so you can see that strong move in gold prices, and you can see the weakness in the dollar, at least not helping it initially, but really lately has been the weakness in yield, as TLT has been up strong. So weakness in the dollar, weakness in yields will both appear to be basing, and then relative weakness in commodities. But then now equities, all three, the QQQ has dropped below commodities, the S&P has dropped below it, and IWM has dropped below it. So, and EEM has dropped below DBC now, with only EFA being above it. So even equities have started to underperform commodities. So we're slowly seeing just a small, slow rotation into kind of more risk-off situations here. So again, XLY, XLC are in, with healthcare, incidentally, with all these weight loss drugs, are the only three sectors right now that are in the lagging category. Utilities and real estate now, along with materials, are in the leading, and energy as well. So again, your two dollar sensitive areas, your two interest rate sensitive areas are all starting to outperform at about the time that both the yields and the dollar appear to be bottoming. So it might not be very long. It might be a short-lived situation here. XLK has been moving up in the improving, and staples are improving too. XLK looks like it's the closest, though it might, you would expect that it'll probably turn and follow suit with where XLY and XLC is down here at the bottom. And the other good cyclical areas that you'd want to see leading, industrials, financials, and like I said, materials and energy as well. But those two are now moving down into the weakening category too. So they still have relative strength, but they're losing it. They're losing momentum there. So you can see the rotation. If you look at the rotation and asset allocation, we'll just go on a daily chart here. Again, you can see Bitcoin is just absolutely killing everything right now. But let's take that off and fit everything else in. Your S&P has been like, this is relative to a balanced index of stocks and bonds, and S&P has been in the weakening category. Bitcoin's the only one up there in the leading. And then your corporate bonds, investment grade in particular, commodities and treasury bonds are all and kind of moving up, right, with the strongest momentum. And then you can see the dollar down here, the GSG down here as well. But again, the equities are moving down. If I were to throw in QQQ and IWM, so we can kind of see the different stages of, take Bitcoin off there again so we can take off the anomaly. But IWM is still very strong, and Qs are still in the leading category, though the Qs appear to be rolling over, and like I said, more of a move into safety areas, like again treasury bonds, and in this case really oversold commodity prices. All right, now let's take a look at our trade idea of the day. It's on Moderna. Remember, these are all the trades that were still in from previous Market Outlook videos that I review in the Market Outlook Live, and we already placed today's trade in the Market Outlook Live video today as well. Let's take a look at its chart. So bear with me 1 second while I bring that up here. Moderna. Good breakout today. Dark green shading the green line. Kind of had a little bit of a breakout yesterday, but today was the big one. You'll see why here in a second. Yes, the intermediate line is well inside bullish territory, having crossed above market sentiment, 17% above the moving average. Very strong bullish move. Near-term line is well into the reversal zone to kind of really support this new bullish change. If you look at the weekly version of it, you can see we also have dark green shading in a green line, kind of just starting on this, and you're 18% above the 30-week moving average there. But it looks like it's just kind of getting going. Looking at the other weekly chart that we look at, you can see also that we have a close above the 40-week exponential moving average for the first time in a while. PPO has been positive and rising. Very strong bullish candles so far this week. Very, very strong bullish candles. So this doesn't seem like this kind of a nothing burger move. It seems like a sentiment changing type move. 3 green arrows, very strong jump in volume here. Now last time you had 3 green arrows with a strong jump in volume, it didn't hold. But this time you're a lot further up above the moving average, much more likely to hold in this scenario. Obviously you have, sorry, we already looked at that chart. Looking at the 2-line versions, if I can actually click on the right one here. There we go. If you look at the 2-line version of the 3 green arrow chart, there's the reason why we broke out so much today. Big move above the 200-day. In fact, this is the first time we've been above, this clearly above the 200-day moving average for over a year. Since beginning of 2023, we've been below it for that long. Finally crossing back up above it. In this case, crossing above the 50-week. We've been in this bear market for Moderna. Crossing above the 50-week moving average. Now you have a pretty decent gap size to fill up towards 150. Potentially, of course. Looking at some of the other oscillators, if you look at the DMI, very strong bullish breakout pattern up above 40, well below 20 on the positive. Again, very similar to this move over here where we weren't so far below 20 at the time. Really, it was the second wave above 40 that right here where we were about similar to where we are now, and that continued a very strong move. You would expect it being the case now again because we're, again, like I said, above the 200-day moving average this time. Looking at the RSI and the CCI, very strong breakout patterns there, well above 60, well above 200. On the weekly, getting above 100 as well, and almost above 60 again for the first time since early 2023. So good opportunity as well for its long-term prospects. If you look at the Ichimoku cloud, we are well above the cloud, positive rate of change now. So nice breakout here. Like we're intermediate trend strength on the trend. So like I said, it seems like more of a breakout, a sentiment changing, trend starting breakout pattern. Again, how much it's already moved, makes me a little concerned about chasing it. So instead of doing a kind of a strong directional trend, I did a little bit more. At the time, it was at the money. The 115 was at the money, but I did a little bit more. Was a little safer, a little less aggressive of a bullish move. So I bought the at the money, which now would be the 110, but was 115 when I got into it, and then sold one strike away. So it ends up position sizing for my normal directional risk, which is half of my normal risk, which is at around $500. We'll put getting about $900 of reward. So again, relatively higher probability opportunity considering the directional nature of the trade, but But then again, the point of that is, you wonder how much opportunity there is. The one standard deviation is all the way up to 133, but we've already moved so much. We're going to have time working against us, so that you can see how much time, that's how much wiggle room I have to work with here. That allows, the stock to not have to go up every single day. It gives it a little bit of time to kind of try to consolidate some of these gains before hopefully making its way back up above 120 and where we can get maximum gain on it. All right, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember, subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at marketscholars.com for free. Follow and like me on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all next time.